So, you want to know what can happen if you invest $1,000 a month into the stock market consistently? Well, today I'm going to be showing you my 3-fund portfolio that can help you get there in an efficient and safe way. Now, I'm going to be using historical returns. I'm going to be using a realistic approach to the growth expectations that there is, and also how much time you'll really need to get to the number that you want to, and how much you might actually need to invest per month to get there. Now, without further ado, let's get right into the video. So here's how I'm going to structure this. I'm going to be using 30% allocation into VFV or VOO, and then 45% into VGT, the Vanguard Technology ETF, and then 25% into SCHD, a dividend-focused ETF. Now, for returns, I'm going to be using historical performance since inception, so since the ETF came out. For VOO/VFV, we're going to be using 10.2% annualized return. For VGT, we'll be using an annualized return of about 16%. It is a high growth stock, so it does return those values on an annual basis. And then SCHD, we'll be using a roughly 12.6-year annualized return. Now, this gives us a blended return of about 13.4% year on average. Of course, past performance does not guarantee the future, but it gives us a solid estimate. Now, we'll start with 10 years and then we'll go 20, 30 after that. So what happens after 10 years of investing $1,000 every single month? So obviously 1,000 times 12 is 12,000. 12,000 times 10 is 120,000. So over 10 years, you'll have contributed 120,000. At our blended return rate of 13.4% per year, your portfolio should grow to about 225,000, assuming a 13.4% year gain. Now that nearly doubles what you put in, and it's only just the beginning. Now let's look at the 20-year rate. Now let's assume that you keep investing $1,000 a month, and you do it for about 20 years. That's going to give you a total contribution of about 240,000. Now with compounding, that turns into a roughly 1.36 million, $0.36 million, guys. So just in 20 years, you have nearly more than quadrupled your money. Now it gets even better. In 30 years, you really start to compound here. After 30 years, your contributions is about 360,000, and your expected value at a 13.4% return becomes a merely $3.79 million in 30 years. That's over 10 times your contributions, thanks to time and the magic of compound growth. Now, let's look at it, side by side. So 10 years, you have 225,000 from a merely $1,000 a month. 20 years, you have $1 million. And then in 30 years, you have $3.79 million. Notice how most of the growth happens in the last decade. That's why the earlier you start, the more insane the results get. But yeah, guys, I do want to preface by saying that this is on the higher risk side in terms of portfolio diversification, because it is 45% in the tech sector and then 30% in the S&P 500 sector, and then you have 25% in SCHD. But in terms of overall diversification and in terms of a safe investment, I will say this has the perfect balance between low risk and high reward, in the sense that 55% of it is actually quite conservative, and then you have 45% being that high growth, high risk, but also high reward type of portfolio. So it'll give you that nice growth over the 10, 20, 30 year mark. Now, obviously you can change the way you, kind of put your money in those certain sectors. You can change up the percentages to fit your liking, or you can also invest more than $1,000 a month if you want to get to that millionaire status earlier on. And but yeah, that's the video, guys. So if you have any questions, you want to like, comment, subscribe, and just comment below what you learned from this video. If you have any questions, something you want to see in future videos. But yeah, that's it, and I'll leave you guys to it, and I'll see you next time.